Hello everyone. So today we are going to talk about big data. This is the last topic of your unit number 20 of IT section. Okay, so big data we are going to discuss. First, we need to understand what does mean by big data. So big data mean to say the data which is having huge quantity. Okay, and that data, okay, could be structured, it could be semi-structured, or it could be unstructured data. So we will talk about these terminologies. So obviously, guys, if you will talk about from business point of view, so as we continue with the business, so over the years, so we capture the data about our maybe customers, suppliers, maybe about the operation, finance, okay, logistic. So over the years, it will become a big data, okay, and sometime that big data we need to analyze, okay, we need to extract some useful information from that available big data. Okay, so why we are doing this? Because maybe we need to take certain decisions. Why analysis of big data is required? Maybe if you will analyze the big data, it may help you in the cost reduction. If you will analyze the big data, maybe it will help you to improve your business processes. If you will analyze big data, maybe it can help you to fix some problems. Or if you will analyze big data, maybe it can help you to find some relationship or some trends. Okay, so that is why this is what we are going to discuss. Understood? So if you will go through what's written here, big data evolving term that describes any voluminous amount of structured, semi-structured or unstructured data. Understood? And in simple words, here you have a huge quantity of data. And if you will mine that data, mine means to say if you will do analysis, okay, if you will go or if you will extract the useful information, if you want to extract the useful information from that big data, understood, as I told you, it can help you in your process improvements, in cost reduction, maybe in quality improvements. Okay. Now, so what does mean by here? First word I'm going to explain. What does mean by structured data? So structured data means say the structured data refers to data that are highly organized into predefined grouping. Okay, like simply the data which is highly organized mean to say it is properly arranged. Okay, in predefined grouping means say for example if you are a bank, so maybe regarding your customers, so you can organize the data, okay, in proper structure. For example, maybe you can create or you can keep the record of the name of the customer, account number of the customer, IBAN number of the customer, right? Street address of the customer, email address of the customer, phone number of the customer, right? And their credit history also, okay, and their bank statements also, obviously you are maintaining, right? So this is called structured data. So structured data means simply it is the data which is highly organized. Where? Into the databases. Obviously, database means is the place where data is stored in organized way, right? So database, you can simply assume it is like a server where whole data of the company is there, right? If it is highly organized, properly managed, so that is called what? Structured data. If data is properly structured, guys, obviously what benefits it can offer you? So first benefit is what? It is easy to store, obviously, okay, and it is easy to search by computer program also. Understood? So this is what is the structured data. Then for example, we have a second type which is called semi-structured data. So as per the word, semi-structured mean to say it is partially organized and partially inorganized. Understood? So that is called semi-structured data. So it is, so semi-structured data refers to data that are not as highly organized as structured data, but still have some identifying information that can be used for organization by computer programs. So in simple words, so semi-structured data is the data, guys, okay, which is not highly organized, but to some extent it is organized, and to some extent it is raw data, maybe it is not organized. So that is called what? Semi-structured data. So I can just give you example. For example, if you are a bank, you are creating a database for the name of the customers and phone numbers, etc., but it is not up highly organized, maybe the format is not proper, etc. So that will be the example of semi-structured data. Another example is what? Maybe you may have, some audios, videos, images, but that is not properly organized, understood, by category. Okay, so that is also semi-structured data. So then we have here, guys, unstructured data. As per the word, unstructured means the data. This is the data which is not organized at all. Understood? So which is not organized at all. So I can just give you a very simple example, okay, to understand these three categories. Okay, so this is the example from your common life. For example, you are running a garment business. Understood? So you are selling men's relevant garments and ladies relevant garments and kids relevant garments. So if you will visit any shopping store, obviously, when you enter into the proper shopping stores, so there you can find like this is the men's section, this is the women's section, this is the kids section. So you can say that is structured data. So you can assume the garment is the data, but that is highly organized. So now, for example, there is another, shopping center where you entered and you found that, so they have two sections for men's for the ladies, but what they did, they put all the clothes in the bins. Understood? It is not properly organized, like these are the t-shirts, these are the formal shirts, or these are the formal wear like shoes, etc., but they put everything in the bins. For the gents one side and for the ladies other side, but these things are in the bins again. Understood? So mostly it happens when the products are on the sale. So this data, to some extent, it is organized because ladies data is separate and gents data is separate, but so it is not highly organized because t-shirts, formal shirts, these are not properly categorized. So that is called semi-structured data. Now, for example, you are going to visit the third store where you found that there is 3-4 bins are there and everything is mixed. In each bin you can find ladies relevant things, gents relevant things, kids relevant things. So that data is called what? Unstructured data. So simply unstructured data means the data which is not organized at all. Understood? So what is the loss of unstructured data to the organization? Obviously, so if the data is unstructured, this lack of organization make such data much more difficult for computer programs to search. For example, if data is not organized, so if you want to search something, maybe it is very hard for you to, let's assume, to identify relevant things. This is called what? Unstructured data. Understood? Now, guys, here I'm going to explain. So there is another word. It is, this topic also belongs to the big data. So big data always having 4 V's. 4 V's mean to say, so there are 4 qualities of big data. Number 1 is called, first V stand for volume. Second V stand for variety. Third V stand for velocity. And the fourth V stand for veracity. So what it does mean by these 4 terminologies? So these, you can say, these are the features or characteristics of the big data. 4 V's. Okay. Volume, variety, velocity, and veracity. So here we go, guys. First number, what does mean by volume? So this is the first feature of the big data. So volume mean to say, so obviously the quantity of data. In big data, we always have huge or the large amount of data or huge amount of data which is captured over time. For example, you are into your business maybe for last 20 years. Obviously, over the last 20 years, so you will have now huge quantity of the data with you, right? Data belongs to financial statements, operations, logistics, budgets, etc. So that is called volume. So volume, it's this term is used to describe the large amount of data captured over time. Okay, so obviously if you have a large amount of data, sometimes this data can be stored maybe in one server, in single server. Sometimes maybe you need many servers to keep this data, to retain this data. So that is called volume. Volume is the first feature. Okay, like big data is having always high volume, means a huge quantity of data. Then we have a variety. Second word is means a variety does mean what does mean by variety? Variety simply means say the types of data. Big, this is the second feature of the big data. Okay, so we have always different types of data. Let's look into the business. In business, you may have data relevant to finance section. You may have data relevant to operation. You may have data relevant to capital budgeting. You may have data relevant to operational budgeting. You may have data relevant to manufacturing. You may have data relevant to HR. So that is called variety. So variety means to say, so different types of data. This is the second features of the big data. You always have variety of data. So data variety means a data exists in a wide variety of the file types. Understood? And please remember here, so if data is structured, as I told you, if it is highly organized, so structured data file types are generally maintained by structured query language. So SQL is one of the language, okay, which can be used to manage the data, to structure the data. Understood? But if you have unstructured data files, okay, so okay, like for example, maybe text, audios, images, videos are maintained by non-relational database, okay, which is also called non-relational database. And what is non-relational? This we have already covered under database types. Understood? So in simple words, variety means say you have a different types of data, which could be structured, which could be unstructured as well. Okay, remember this. This is the language which generally we use to maintain the structured data. Understood? So this is what you have to remember. Then third type we have here, velocity. Okay, what does mean by velocity? This term refers to the speed at which big data must be analyzed. Simply, okay, in simple words, I can tell you this way. Sometimes, guys, to scan the data or to analyze the data, we need a good speed. Understood? So which is called velocity. Velocity means say the speed at which big data must be analyzed. Because if you will make analysis late, if you will do the analysis late, what will happen? So you may take the decisions also late. Your decisions might also be late. For example, maybe I want to decide, okay, like which movies or which TV show I need to, let's assume, produce. I'm just giving you example, or which products I need to produce and market into the market. Okay, so what I have to do, I need to take very quick decision. Right or wrong? For example, if competitor will launch the same product before me, obviously he will get the competitive edge, he will get the customer, he will get the sales as well, right? But if I will launch the product before my competitors, right? Understood? So then I'll get the customers, I'll get the huge sales, I'll get the benefit of the new technology, right? Through the sale of technology. So that is called velocity. Velocity terms refers to speed at which big data must be analyzed. Sometimes speed at which big data must be analyzed is more important, because if you will analyze the data quickly, you can take the decision quickly. If you will analyze the data, slowly, obviously your decisions making will be slowly, and you may lose your position in the market. So this is what is called velocity. And the fourth V, which is called what? Veracity. What does mean by veracity? This terms refers to the trustworthiness of data. This word, like how trustworthy this data is. Understood? How useful this data is. Sometimes, for example, I can just give you example. For example, I want to read about weather forecast. So first thing what I can do, I can maybe ask you, oh, what is the expected weather tomorrow? Okay, you are not the authentic source. Maybe you can give me some information. You may give me some input, but that is not trustworthy. Okay, so veracity stands for the sources of data from where you are getting. Okay, that must be trustworthy. Sometime, for example, I got the data maybe from Google here and there. Let's assume that data is not from authentic source. And if I will analyze that data, okay, and I'll take the decision making based on that, because data was not authentic, my decision might go wrong as well. Understood? Veracity means to say this term refers to the trustworthiness of that data. Understood? So the data must be you can say from those sources which can be relied upon, which can be used, on which you can trust. That is called veracity. So these are the fourth V: volume. Okay. Second, what it was? Velocity, veracity, and what? Variety. So these are the four V's. Now, guys, there is also the fifth V. Nowadays, we also say there is a fifth V, but fifth V stand for value. Like how valuable this data is for the organization. Okay, is this data is valuable for the organization or not valuable? Or is this data is having value to the organization or it doesn't having any value to the organization? Now this is the fifth V. So fifth V, the value, the word value you can attach with volume based value sometime. The word value you can attach variety based value. The word value you can attach with velocity based value. So what does mean by volume based? Okay, let me give you example. For some organization, the quantity of data is having value. If data is having less quantity, it is not valuable for the organization. Okay. For example, if you will talk about from customer point of view, okay, you maybe want to get some data about customers. So the quantity of data or the quantity of the customers data, obviously that will have value to the organization. In that quantity of data, so you must have, okay, recent customers name, historical customer names, understood their buying habits. So if you will have huge quantity of data regarding the customers, so you can take better decision how to acquire the new customers, how to retain the customers, how to increase the customer, or how to manage the relationship with the customers. So this is called volume based value. Volume based value mean to say, for some organization, if data is having value, okay, if data is having quantity, huge quantity, okay, then it is having a value to the organization. That is called volume based value. Then guys, we have another fifth V, second category, which is called variety based value. Okay, what does mean by variety? For some organization, if data is having different variety, it will have a value to the organization. It is useful to the organization. If data is not having sufficient variety, maybe it is not useful for the organization. That is called variety based values. Understood? For example, you should have a variety of, let's assume if we'll talk about from the customer point of view. So you should have a variety of customer data. For example, data about kids, about maybe adults, about maybe old people, understood, and their buying habits. So that is called variety based, and in which markets they interact, or with which markets they interact and they buy the products. So if you will have a different variety of data, so that is called variety based value. Like for some organization, data is valuable if it is having different variety. Then third is called velocity based value. Okay, so velocity, the speed at which data is analyzed. Okay, for some organization where the speed of data analysis is there, okay, where what I'm trying to say, for some organization, the speed at which data is analyzed is more important. Understood? If data, you are analyzing data more quickly, then it is having a value to the organization. If you are not analyzing the data quickly, so then maybe it is not having any value to the organization. So this is called the fifth V. Now guys, sometimes they ask the question like, what is the use of big data? Use, like when we analyze the big data, obviously for the decision making purpose, so where we use this analysis, obviously the big data can be used to identify opportunities for, like, the analysis of big data can help you in cost reduction. Okay, the analysis of big data, okay, can help you in time reduction. For example, maybe let's assume you are delivering the products to the customers. Obviously, maybe you are taking more time than expected time. So you may analyze the data. What is the reason for that? So it can help you to reduce the time of delivery, or maybe the time to introduce the product into the market, that can also be reduced if you will analyze the data about logistics, etc. Understood, about marketing campaign, etc. So the big data can also help you to decide which new product you should develop and where to offer, what to offer, at which price to offer. Okay, and the analysis of big data, okay, can also help you to identify the new customers or the buying habits of the customers. So it can be any reason, guys. Obviously, when you analyze the big data, obviously before analysis, you have to set the questions, right? So for which questions you want to answer, or for which answer you are looking for, the answer. So that is called what? Use of big data. I hope so it is clear. Okay, guys, there is a one word that is called data fusion. Please also remember. Okay, what does mean by data fusion? Data fusion, it's sometimes it's written in your study text also. Data fusion is the process of integrating multiple data sources. Like simply like when you extract the data from different, or when you extract, the useful information from different sources, or when you integrate, the word actually they have written, the integration. Okay, it is the process of integrating multiple data sources to produce more consistent, accurate, and useful information than that provided by individual data source. For example, if you want to take certain decision about your companies, okay, for example, maybe you want to see, let's assume, where to cut the cost, for example, or maybe you want to cut the cost in specific department, or maybe you want to cut the cost throughout the organization. So you will capture the data throughout the organization, right or wrong? So, and then you will see where you are incurring cost, how much you are incurring cost, okay, where you are incurring unnecessary or excessive cost, and which can be reduced. Okay, so this is what is called data fusion. Data fusion is what? It is the process of integrating. You are trying to link the data from multiple source. So if you will get the data from multiple source, so you can get more consistent, accurate, and useful information. Okay, and obviously this information is more consistent, accurate, and useful. And this will not be consistent, this will not be accurate, this will not be useful, okay, if maybe you will get from one individual source. So integration of multiple data sources is called what? Data fusion. Now, guys, these terminology I have already explained. What is the predictive analysis, text mining? So I'm not explaining here these kind of things. So simply you can ignore. So here we go. Now, guys, here we have some limitations of big data. Okay, limitation means what is the problems with the big data. So number one is what? For example, the first problem, simply you can say, when you analyze the big data. So the first problem is users level data results are incomplete. Okay, so what does mean by here? Sometime maybe the data which you have, that is not a complete data. Okay, maybe which cannot show you the accurate picture of the organization status. So this is the first problem. Sometimes you have a huge quantity of data, but that is not useful. That is because it is not complete. So this is the first problem. Understood? So then we have second problem is what? So second problem is providing the answers to why the analysis results are what they are is difficult. Sometimes, guys, what we do, so obviously we analyze the data. Okay, when we analyze the data, so maybe we can apply some methods to analyze the data, or maybe we can apply some algorithm, algorithm methods. Okay, so to analyze the data. Understood? Because when you apply certain models, maybe you want to predict the data for the future. For example, I'm just giving example. Let's assume, so you want to make the prediction of the sale in the next year. So you have a past 5 years data, and you are applying some models, maybe high-low method or regression analysis to make the prediction for the future. Understood? So obviously, so it can give you, different answers. Maybe if you will apply one model to make the prediction, maybe it will give you different answer. For example, if you will take the opinion of the expert people, what would be the sale in next year? Maybe they will give you different answer. And if you will apply regression analysis, maybe it will give you different, result. So now maybe you will prefer one, or you should rely on regression, or you have to rely on Delphi approach, expert approach. So now why you are choosing one and why you are leaving other? Understood? So it is hard to justify. Okay, so this is what is the second problem with the big data. Okay, why you are choosing one? For example, why you are producing product A and why you are stopping product B. Okay, so why you are doing this? It is hard to justify because data analysis is based on so many assumptions. Then, guys, number third, what is the limitation of data? Big data. The data are subject to useless information, commonly known as noisy. As I told you, it's like a first point. As I told you, sometimes you have a noisy data, which has useless information. Understood? So, if you have, for example, you want to take decision about maybe cost of capital. I'm giving you example within the context of finance. Cost of capital, like it is the cost of the capital or it is the cost of fund which you are using as a company. Maybe for example, you are taking finance from the debt, taking finance from the equity. You have a different sources. Obviously you are paying dividend to the equity holders, interest to the debt holders. Now you want to know what is your average cost of capital. And obviously, for example, for that maybe you will calculate cost of the equity. You will calculate, okay, you will calculate maybe the cost of the debt. You will calculate, and then you will calculate the weighted average. I'm not sure you are aware with this or not. I'm just giving you simple example. So for example, the cost of debt which you have calculated, that is incorrect. Let's assume if it is incorrect, obviously, because one variable in the formula, if it is incorrect, okay, one factor in the formula, if it is incorrect, okay, so maybe it can produce misleading results for you. Understood? This is what is called data are subject to useless information, or commonly known as noise. Noise means a single incorrect or useless variable, like single useless factor, can corrupt the result and require additional labor hours to work with the data in order to attain meaningful results. It's not necessarily only labor hours. They gave examples in other contexts. As I told you, for example, let me make it more simple. Maybe you are confused. So for example, you want to know what is the cost to construct your house. So the cost of cement, for example, you estimated how many bags you need, the labor cost, for example, marble cost, or maybe the tiles cost, for example, other costs like maybe electrician, etc. But you don't know one thing, exactly what, just assuming, what would be the cost to decorate the house. Interior decoration, that cost is misleading. So obviously, if that factor you don't know, so maybe you can calculate wrong cost, wrong total cost of the house. This is what is called data are subject to useless information. If you have any information which is useless, okay, or if any one variable is incorrect, so it can destroy the overall results. Okay, then what? This is what is the fourth point. User level data results require interpretation prior to use. Obviously, this is obviously if you want to use any data or if you want to analyze any data, first you need to interpret. Okay, for which reason you are collecting this data. Or for example, if you analyze, let me make it more simple. For example, you have done some analysis of data, and now so you have to convey your message to the reader. Maybe you will visualize the data, maybe you will prepare some formats, but which is not understood by the user. So this is also the problem. Sometimes we put much efforts to analyze the data, okay, and we make the presentations, but that presentations maybe are misinterpreted by the reader, okay, not by the preparer. Or maybe reader doesn't know what are the interpretation of this graph or etc. This is also a problem. Okay, this is what is called big data. I told you big data, features of big data and limitations of the big data. Okay, then guys, we have a next topic. Okay, guys, so now we are going to talk about data visualization. Okay, data visualization simply, and maybe let me first highlight those words and you will understand in very simple words. Sometime maybe we present that data, okay, to the reader, okay, maybe in histograms, in box plots, in scatter plots, maybe in dot plots, maybe in tables, okay, maybe dashboards, bar charts, pie charts, line charts, bubble charts, right or wrong? So in simple words, sometimes we present the data after certain analysis. Okay, we present the data to the reader in graphical shape. Okay, so because graphical shape can help the reader to understand the data in more easy way. Understood? So which can helps the decision makers to identify patterns, deviations from the patterns, and outliers in the analysis stage. So in simple words, so when visualization means simply we are presenting the data in easy to understandable manner. It could be a graph, table, certain charts, etc. So this is what we are going to discuss now, like which techniques can be used for data visualization. So here we go. I'm going to explain here now. Number one, please, I need your concentration, guys. So at least you should have basic idea of all these, data visualization techniques. So sometime, so we use the first way to visualize the data, which we can use, that is called statistical control chart. For example, I'm just giving you example. So what does mean by statistical control chart? So let me say first in simple words. For example, you are a production manager, let's assume, and you have set upper control limit. Word I'm using, what? Upper control limit. So what it is, I will tell you. For example, upper control limit means say the maximum production per day should be 200 units. Okay, maybe if you will produce more than 200 units, so you have a storage issue, okay, etc. So then you will set the lower control limit. Lower control limit. For example, the minimum production should be 180 units. Because if you will produce below the 180, again you have a problem. Maybe what could be the problem? Maybe you will be out of, your product will be short in the market, you will lose the customer, etc. But if your production is in between this range, between the lower control limit and the upper control limit, okay, then there is no problem, for example. Understood? So this way, if you are controlling certain things, so that is called what? Statistical control chart. So if you will go through here, what's written here, let me go through with you now. This was the idea which I gave you. So statistical control charts are a graphic aids for monitoring the status of any process. As I give you example, maybe it could be a manufacturing process. Understood? So, and there you will set the upper control limit. There you will set the lower control limit. If it will go, if your data, if your production is in between upper and lower control level, lower control limit, then maybe it is acceptable to you. But if it will exceed the upper control limit, or if it will be below the lower control limit, maybe it could be unacceptable to you. Understood? This is the one simple example, as I told you. So here they, as an example, they gave another example. For example, they're saying the chart below, like this chart, they're saying depicts 2 weeks of production by manufacturer who produce a single precision part each day. We are manufacturing one product each day. So to be usable, the part can vary from the standard, okay, by no more than plus minus 0.1 millimeters, 1 millimeter. Let's assume it could be the size of the part. So size of part is acceptable. If it is not acceptable, if it will be more than, okay, 0.1 millimeter. Understood? So it means this could be the upper limit, this could be the lower limit. If the production is between, so we will say the product is being manufactured as per standard. Okay, if it in this limit, if it will go cross this or cross this limit or below this limit, so we would say the production, obviously guys, it is not as per standard and it is not acceptable. So this is just an example they have for today. Another way to visualize the data, that is called Pareto diagram. Okay, Pareto diagram, I can just give you. So if you will look at here, Pareto diagram is a bar chart. It is a chart that assists managers in quality control analysis. So here as example, what they have given you. For example, they're saying Chief Administrative Officer, CAO, okay, wants to know which departments are generating the most travel vouchers that have to be returned to submitter because of incomplete documentation. Let me give you a simple example. For example, sometimes guys, we travel for the organization, right? For maybe for your work purpose from one place to the other place, and you will incur certain cost for the traveling. And later on, maybe you can provide these documents to the accounts department, and they may reimburse your business expenses. So same here. So the chief administrator officer, he want to know actually, so how many vouchers, travel vouchers are there, so which should be rejected by us because they have incomplete documentation. This is the question. And now the data is presented this way. For example, here they wrote rejected travel vouchers, and here they wrote the department name like retail department, wholesale department, corporate accounts, wholesale accounts, retail accounting, etc. Now what you can observe from this presentation. Okay, so for example, here if you look at this point, it means there are 40 vouchers are there, okay, which are rejected for which department? For example, for the retail department. And if you will look at this point now, this point, maybe there are 38 vouchers which are rejected for which department? Wholesale department. If you will look at this point, okay, it means there are maybe 20 vouchers which is rejected for corporate accounting department. So this is if the data is presented this way, okay, so that is called Pareto diagram. Understood? So in Pareto diagram, maybe the data will move from higher side to lower side if you are coming from left to right side. Understood? Then we have here another diagram that is called histograms. This is another way to visualize the data. Okay, what is histogram? So guys, if you look at a histogram, is similar to a Pareto diagram, but the major distinction is that histograms display a continuum for the independent variable. Like simply it is continuum. It has information. Let me give you example. What is the difference? For example, again here we have here the chief administrative officer wants to know the amount of typical rejected travel vouchers. The amount of typical. He wants to know what is the amount of rejected travel vouchers. So for example, here we have our rejected travel vouchers. These are the number of vouchers. 1, 2, 3, 4, 5. And here is we have a voucher amount. Now, if you will look at this point, it means there are almost 5, let's assume vouchers are there. 5, okay, which is having a $60 amount. So it means 5 vouchers are rejected and each voucher is having a $60 amount. Let's assume if you are sitting at this point, it means there is a one voucher, which is having $20 worth and it is rejected. If you are sitting at this point now, let's assume, it means there are 3 vouchers which are rejected and each voucher is having $30 amount. Understood? So please remember here you are writing data, in continue form. For example, 0, 1, 2, 3, 4, 5. Here you have a 0, $10, $20, $30, $40, 50, 60, 70. And if you are presenting data this way, this is called what? Histogram. Understood? So this is the word. So here we go. Then we have here Fishbone diagram. So let me tell you, this is also the way to present or visualize the data. Actually, please remember the Fishbone diagram, also called cause and effect diagram. And mostly it is used under total quality management process. Okay, because we want to improve the quality of the product. So and there you can use this. So let me give you example how it will work. For example, you will always draw first problem statement. What is problem? This is the problem statement. Now, what is this problem actually? Problem is maybe your products are defective. This is the problem. So you have to identify what is the problem first. That is called problem statement. Okay, for example, our product is being manufactured or our products are defective products. During manufacturing, it is getting defects. Okay, so now once problem statement is written, then you need to identify what could be the possible causes. For example, the first cause in my mind is maybe our raw material is having inferior quality. Due to inferior quality, maybe our products are being defective products. Okay, this is the first problem. I wrote it. maybe there could be a second cause. Maybe second cause could be maybe our labor is unskilled, so they are not experienced, and while they are making products, so they are creating defects. So it means labor could be the problem. So here I wrote the raw material could be the problem, or the defects could be due to the labor. Third is what? Maybe third point's coming in my mind. Maybe our machine is out of date or out of fashion, or maybe it is too old. That is why the defective products are being manufactured. This could be the reason. And fourth reason could be maybe any other reason. I'm just saying. Understood? Now, guys, once problem statements are written and possible causes are, identified, then you will investigate each cause. First, for example, I will investigate. Is there any problem with the raw material? I found that no. Raw material is good. Understood? It is having appropriate quality. Okay, so this is not the reason that the products are defective. Then I'll move to the second. I'll investigate the second issue. Is it the issue of unskilled labor? And I realized that no, it is not that case, because we have well experienced, well informed labor. Okay, so they are experienced, they are expert in manufacturing the product, and it is not their fault that products are being defective. Okay, then what? Once I analyzed, for example, the third reason, maybe I found that yes, it is due to the machine, because machine, we are not maintaining machine on time. So we do not do maintenance on time. Understood? And machine is old. Due to this maintenance issue, okay, the products are being defective products. Understood? So now I'll fix this issue. Once I'll fix this problem, obviously this overall, the major problem will be solved. This is called what? The Fishbone diagram. Then guys, we have another way to visualize the data, that is called box plots. Okay, box plots. So this is how it looks like that. Okay, so let me say this way. So let me show you, because different words we can use. So some people say under box plot, like when you present the data through the box plot, it's also a data visualization. So what you will do, you will divide your data in 5 types. So let me say 5 types. Number 1, first could be what is the minimum value, what is the first quartile, Q1 quartile 1, what is the median, what is third quartile, what is the maximum quartile. So we need to find 5 values, minimum values from any data set. Quartile 1, median, quartile 3, or maximum value. Okay, so maybe you are understanding what it is. So let me give you proper example. Okay, median, I hope so, it's a middle value, right or wrong? It's a middle value, that is called median. So what is minimum, what is Q1, what is median, what is Q3, and what is the maximum value? This is what I'm going to explain. Let's understand how the box plot are prepared. Obviously, it can be prepared through the computers as well. So here we go. A sample, for example. Let's say we have a 10 boxes of raisins. Raisins, like you can say it's a dry fruit. We have 10 boxes of dry fruits. Maybe you are selling dry fruits and you're packing your boxes. Okay. And the weight of these boxes are in grams. For example, the first box is having 25 gram. Second box is having 28 gram. Third is having 29. Fourth is having 29. Fifth is having 30. Sixth is having 34. Then 35 gram, 37 gram, and 38 grams. So these are 10 boxes. Okay. So if you want to prepare the box plot of these 10 boxes, so how you can prepare? So don't forget, first you have to find out minimum value. Then you have to find out the quartile 1, then median, okay, then quartile 3, and then the maximum value. So these 5 values you need to prepare the box plot. Okay, so let's assume what we have to do. So very first thing, step number 1. So you have to order the data from smallest to the largest. Like simply you have to write the data in an order from smallest value to the largest value. And by the way, this is already written this way. If you will look 25, 28, 29, 29, 30, 34, 35, 35, 37, 38. So our data is already in order. Okay, so it is already in order. This is step number 1. And step number 2, what you have to do? Please remember, step number 2, you have to find the median. Median means the middle value. If you will look at this data set, so what is the middle value? So because these are 10 values, so middle values will become these two. Right or wrong? 4 are on left side, 4 are on right side. So middle value will become 10. But if you have a data, 9 boxes, for example, 1, 2, 3, 4, 5, 6, 7, 8, 9, then middle value will become this value. But if you have, 10, 12, or 14 data set, so obviously middle value will become middle 2. So find the median. So median, how you will find? First, the median is the mean. Mean means to say average. The median is the average of middle 2 numbers. So these are middle 2. These are middle 2. So 30 plus 32. How you will get the average of that? So what you will do? You will take 30 plus 34 divided by 2. You will get the average is 32. Understood? Now the median is 32. The average is 32. The mean of the middle 2 is the 32. Median overall is the middle value. But here there are 2 middle values. So we need to get the mean of that. Then this is the median now. You have identified the median. One thing you have identified, which is 32 grams. Okay, the weight of those 10, the median for those 10 boxes is the 32 grams. Understood? Then step 3, you will find the quartiles. There is a quartile 1 and quartile 3. And then there is a minimum value. And in between quartile 1 and quartile 3, there is the median. Okay, and then there is a maximum value. So we have identified the median, we have identified. Now you have to identify the quartile 1. So what you will do? So please remember, if you will look the data here, this is the data set in front of you. And your median is 32. Okay, this is the median here, right? 32 is in between 30 and 34. What you will do? You will stay at the median point and look to the left side first. So these 5 digits are called quartile 1. And if you will stay at the median, which is 32, look to the right side, this is called quartile 3. So what you have to do here, quartile 1, how you identified? Quartile 1. Okay, the quartile 1, how you identified, guys? This is written. The first quartile, Q1, is the median of the data points to the left of the median. Simply what it is? It's really important here. The first quartile is the median of the data points to the left side, to the left of the median. So here we go. Let me take you back one more time. So we were here. So this is our median. First, you will look to the left side. So these 5 values are there to the left side. And what is the median of these 5 values? This is called quartile 1. First, go to the median, look to the left side, go to the median, look to the left side, and find the median in the left side. That is quartile 1. Now what you will do? What is quartile 3? Go to the median, look to the right side, and find the middle value. This is called quartile 3. So it means quartile 1 is 29 grams. You can see here. And quartile 3 is 35 grams. And median in between is 32 grams. Now, 3 values you have already identified. Now, what do you have to identify? You have to identify the minimum value and you have to identify the maximum value. So, minimum value from this data set. Minimum value is 25 and maximum is 38. 25 and 38. And now the graph can be prepared. So, 5 values you have identified. Understood? So 5 number summary we have identified. So minimum, maximum, okay, and quartile 1, median, quartile 3, and the maximum value, right? So which value? Minimum, quartile 1, median, quartile 3, and maximum. Understood? These 5 number summary you can produce. By the way, in your book, this much detail is not written. In your book, they have just show you the picture. Okay, they have just show you the picture of the graph. So you can, if you do not want to use the word minimum and maximum. So minimum you can like, but mostly we use minimum, maximum, quartile 1, quartile 3, and median, these 5 numbers. Okay, this is the picture just shown in your book. This is the picture for the box plot. And this boxes can be used, this plot can be used, box plot can be used to visualize the data. Then guys, we have here another way for the data visualization. These all are the charts, guys, to visualize the data, which may, help the reader to understand the data in easy way. So next approach, which we can use to visualize, that is the preparation of tables. Tables, So here, so obviously, you will present the data in rows and columns. Right or wrong? For example, let's see. We have here columns, name of beverage. Here we have first rows, beverage names, soda, soft drinks, water, wine, beer. Okay. And downwards written, women and men. For example, 6 women who drinks the soda and 5 men who drinks the soda. 2 women who drinks the soft drink, 1 man who drinks the soft drink. Then 4 women who drinks water, 3 men who drinks water for them. Wine, 3 women who drinks wine and 5 men who drinks wine. So this could be any data maybe. Understood? So if you are presenting data in rows and columns, so that is called what? Tables. And tables, better than me, guys, you are working every day with your accounts, right? In accounting work. Then we have here another way to visualize the data, that is called dot plots. Dot plots. Dot plot is what? Here data. Okay. It is very similar to histogram. Okay. Histogram. It is also a graph that illustrates the distribution for each factor using dot. For example, if you look at here, so this is the types of beverage for refreshment, but it's for women. So we wrote soda. So how many dots are there? 1, 2, 3, 4, 5, 6. It means 6 women, they drink soda. Okay, 2 dots, 2 women, they drink soft drink. 4 women, they drink water. 3 women, they drink wine. 5 women, they drink beer. Okay, this is what is called box, dot plots. So here data is presented in dots. This is also a way to visualize the data. Then guys, we have here a line chart. Okay. What is line chart? Please remember here, it's also a chart. First, let me show you a picture. Let's assume it will look like that. So there are some data points. These are called data points. Let me explain it properly. For example, here we have on this side, vertical side, we have a product sales in 1000. For example, we have 10,000, 20, 30, 40, 50, 60, 70, 80, 90. And in this horizontally, month-wise sales are written. November, December, January, February, March, April, May, June, etc. Let's see. This is November, December of the last year and from here to onward next year. If you look at this point, for example, one data point is here. What it shows? It shows actually it's written October 2019 here. Here, October 2019, which is hidden. In October 2019, our sale was maybe 35,000. But in November 2019, our sale was maybe 60,000. In December 2019, our sale was maybe again 30,000. In January 2020, our sale was maybe 32,000. Because if you connect this side, you will get the sales in dollar. At this point, in February 2020, maybe our sale was, let's assume 42,000. At this point, what it is? It shows June data. June here. Okay, here, June data. And June 2020, our sale was how much? Maybe 80,000. Understood? Now what you will do, once these, first you will put the plot, put the dot here. And then these dot you will connect with a straight line. Okay, so this is called line chart. This is also to visualize the data, right or wrong. Sometimes these charts are also used in cricket match, where they show the comparison of 2 teams. For example, India-Pakistan match. For example, this is the line for India. Here is a 1 dot. Here maybe it could be runs. Here it could be overs. Right or wrong, 1 dot is here, 1 dot is here, 1 dot. Maybe they're showing, for example, in which overs, at how many runs one person got out, one player got out. They will draw a second line maybe for Pakistan, similar way. Understood? And you can easily compare. This is also a line chart, so it shows sometime on your TV screen. So here we go. A line chart is a type of chart used to show information that changes over time. As I give you example, this was over time, changing over the month. This is the over the overs in cricket. Line charts are created by plotting series of several points. These points are called data points. Connecting them with the straight line. Okay, we connect these points with a straight line. The line charts are used to track changes over short or long period. You are just trying to track what are the changes in the short period or in the long period. This is line chart. I hope it is clear. Then guys, we have here scatter plots. This is another way to visualize the data. So before moving to this point, let me show you first the picture of scatter plots. You have seen this also, maybe you are preparing in your work also. So let me show you the picture of scatter plot, then I'll explain. This is how it will look. For example, this is the one variable. Let's assume it could be a marketing expense. This could be a sales. So there are two variables. Okay, for example, maybe if you spend 3 million on marketing, your sale is, for example, at this point, it means say 100 million. I'm just assuming this is how it looks. If you will interpret this point, it means if you will spend this much 4.5 million on marketing, your sale will be, for example, 125 million. I'm just showing. So sometimes, so this is called what? The scatter plots. This is how it looks. So let me show you what it means. A scatter plot, similar to the line chart, utilizes the horizontal variable x. Variable x, which is written on x-axis, and vertical variable, which is y-axis, to illustrate the correlation among two variables. As I gave you example, because there is always a relationship between two variables, like for example, marketing versus sales. For example, here marketing in million is written, marketing cost. Here sales in million is written. Understood? For example, you are at this point. Maybe your sale is 100 million. Your marketing expense is 30 million. You are at this point. Maybe your sale is 100 and maybe 10 million and your marketing cost is maybe 3.5 million. So this is called what? Scatter plots. Understood? So obviously, this scatter plots, why we use to illustrate correlation among two variables. And that could be positive correlation and that could be negative correlation. Understood? Positive means when you increase expense on marketing, sale is also increasing. This is positive. When you cut the marketing expense, sale is also decreasing. Like both, they are moving in same direction. Either both are increasing, both are decreasing. This is called positive correlation. Then there is an inverse correlation, negative. Maybe for example, if you will spend more money on marketing, your sale is decreasing. Let's assume it is not possible, but I'm just assuming. If this is happening, this is called what? Negative correlation. Then guys, there are bubble charts also. This is also a way to present. For example, let's assume again, bubble charts are similar to scatter plots, where you are trying to show the data in bubbles. Okay. But what is the difference here? Here, a bubble chart incorporates a third variable consisting of grouping of data points represented by the size of the bubble. So let me show you. For example, this picture is shown here. This could be any y variable. This could be any, for example, x variable. Okay, any two variables. Okay, maybe it could be cost versus profit, investment versus profit, anything. So here we have a project. If you look at here, so this picture bubble shows project 1. This picture shows project 2. This picture shows project 3. This picture shows project 4. If you look at this picture, if you look, this is the project 1. It means in project 1, let's assume if this is the profit and this is the investment. For example, our investment is here and profit is here. There's another way. Okay, actually it shows the size of the project. Understood? So this picture, if you will look, this picture represents project 2 or 3. It is this picture, yes. But this picture shows which project 3. This picture shows project 4. Like when you present the data in bubbles, actually, guys, that is called what? Bubble chart. And what is a bubble chart? Is similar to scatter plot. Okay. Scatter plot, in scatter plot, you are checking correlation, understood, of any two variables. A bubble chart incorporates a third variable consisting of grouping of data points represented by the size of the bubble. Okay, like grouping with the size. By the way, they will not ask anything maybe from this because it's just a presentation in the bubbles. Then we have a pie chart. This, this is also, you have seen so many times. A pie chart is a graph in shape of circle with each pie slice. Like this circle, you will divide in the pie slice maybe, representing a relative section of the whole population size. So let me give you example. For example, this is a circle. This circle represents 100. The overall circle represents 100%. Now we are checking student sales, like how many students they are buying scooters, how many students they are buying skateboards, and how many students they are buying bicycles. For example, it shows 10% students they are buying scooters, 25 skateboards, and 65% bicycles. Understood? So this is what is called pie chart, and this is, guys, your data visualization. Now let me take you to the main thing. Here we have few limitations for data visualization which you need to know. Number one, visualization can be misleading. Misleading in a sense, it presents something different, but reader is perceiving something different. Understood? This is what is called first limitation. Second, visualization tools can be manipulated to present a biased picture. Obviously, maybe you can modify the pictures or the graph. Understood? This is also a problem. So this is what was all about big data and data visualization. Okay, guys.